Why are markets absolutely collapsing? What is this Japanese carry trade? We're going to talk about that and explain it in this video so you fully understand the Japanese carry trade everybody keeps talking about and why Japan could be leading markets to crash in America. Of course, it could also be that we are now under an imminent threat of an Iranian and Hezbollah-led attack against Israel, which threatens to be larger than anything Israel has ever seen before, with Israel now warning that Israelis could be without power for 3 days as they face a multi-pronged attack expected to begin within the next 24 hours, if not tonight, then tomorrow night. It's just crazy world that we're in. Or is it just that the US might be going into a recession? Or D, all of the above? Well, in this video, we're going to start by talking about the Japanese carry trade and trying to explain it. Now, let's be clear right at the start. The Japanese stock market ain't doing too well. Just in the last 12 hours, the Japanese market, well, let's just put it this way. Their TOPIX index, circuit breaker hit, no more trading for a period of time. Bond market, circuit breaker hit, no more trading for a period of time. South Korea, in sympathy for what's going on in Japan, just decided, you know what? Nobody's allowed to sell after the Kospi's down 4.6%. Zoom in on Japan for a moment. Nikkei down over 6.5%, the Nikkei 225. Nintendo stocks down 11.3%, but who cares about Nintendo? What are the banks doing in Japan? Oh, the second largest bank in the country down 15.5%. The largest bank in the country, like the equivalent of a JP Morgan, down 12.2%. Well, at least gold's up. Real gold, not digital gold, because Bitcoin's down 11%, Ethereum's down 21%. In the overnight trading app Robinhood, you could look at Tesla down 6%, Apple down 6.9%, Nvidia down 6.75%, and all futures are red, led by, no joke, small caps and NASDAQ 100. And you've got the S&P down 1.42%, and Dow futures also down 0.77%. So this is just a quick little rundown on what the heck is going on here. This is a lot of pain. Why? What is going on? Well, let's start with the carry trade. Let's explain this. So, everybody knows that the entire world has been facing a lot of inflation, except for Japan. They've basically stagnated since the 90s, and they've faced issues of too much deflation. Maybe they're not having enough babies. Maybe they're not having enough innovation. Who knows? But they did not have the inflation problem of the rest of the world. This meant that while Japan was actually lowering rates and had negative interest rates, everyone else was raising interest rates. Now, this does something very interesting because when interest rates go up in, let's say, the United States, it becomes more attractive to buy the 10-year Treasury bond. So for example, if the 10-year Treasury is trading for 3.76%, just like it is now, and the Japanese 10-year is trading for 0.82%, which bond would you rather have? The 10-year debt paying you 3.7% guaranteed and backed by the full faith and credit of the US? Or the Japanese 10-year paying you just 0.82%? It's a no-brainer. An absolute no-brainer. You're going to buy the US bond. And if you have any other currency, you're going to sell that other currency, you're going to go buy US dollars, and you're going to go invest in that US bond. This creates a lot of selling pressure on currencies like the Japanese yen. So the Japanese yen goes down in value, which enables something unique called the carry trade. Okay, now you're going to have to roll with me on this one because it's a little complicated, but I'm going to make it as simple as possible, okay? Here's an example of what a carry trade looks like. And let's just start extremely simple. Let's just say right now you want to take on a margin loan on stocks in America. It might cost you 6.5% in the US. But what if you could go to Japan, and in Japan, you could borrow at 1.5%? Oh, well, that's a lot more desirable. Why don't I go borrow in Japan and then go invest that money in either US treasuries, which are literally yielding more than what I'm paying on my debt, or how about Mag 6 stocks or Mag 7 stocks, whatever you want, right? Mag 6, Mag 7, the biggest stocks in America. Buy some Nvidia, buy the dip on some Tesla, blah, 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 whatever. This is essentially an arbitrage of interest rates. That's what this all comes down to. Now, how does this go wrong? Well, first of all, to understand how it goes wrong, let's understand how it goes right. Let's say I borrow oodles and boodles of money in Japan. And that oodles and boodles, just to make math simple, right now we're just gonna call it $1,000. I go borrow $1,000, or I'll call it 1,000 yen, $1,000 worth of yen. That's what we'll call it, $1,000 worth of Japanese yen. And I'm gonna take that money and I'm gonna use it to go buy US assets. Well, if the Japanese yen keeps going down in value, it's actually gonna be a lot cheaper for me to pay off that money. Like, let's say I take that $1,000 and I put it into US treasuries over here. Well, every single year, I'm getting my 3 or 5% yield on money markets or treasuries, maybe even a little bit more. So maybe let's say over here, I've all of a sudden after a year got $1,050 and the Japanese yen fell 20% in value. So I actually only have to pay back $800 worth of yen over here. This is great. I picked up $50 very cheaply in America. So I'm plus 50 over here. And I can now pay that yen back with 200 fewer dollars. So I pick up $200 over here. Let's go, baby. I just made $250, 25% cha-ching, investing on the fact that the Japanese yen is going down. And guess what the Japanese yen usually does? Like, what does the Japanese yen usually do? Well, because they're facing deflation and stagnation, it's usually either stable or it goes down. With the exception of very rare cases, the Japanese yen usually just loses lots of money. It's just kind of unfortunately the way it's worked. So for example, if you pull up the US to Japanese yen valuation over here, you can see there are very rare cases where the Japanese yen spikes. Once over here in 95, over here in 2011, and you can see over here the yen's actually been plummeting. So it's actually made the carry trade more desirable. I mean, you've dropped 27% in the value of the yen. So that example I just gave on the iPad over here, this has been printing money. It's been absolutely minting. Yeah, close this door. I hear the children again. Hold on a sec. I got two sound doors over there. Let's close this stuff. Anyway, so you've been printing money doing this carry trade. Because the Japanese yen just go down, down, down. So people keep adding to their bets, adding to their bets, adding to their bets, adding to their bets. Okay, cool. Like, you're winning. That's wonderful. Like, Kevin, what's wrong with this? Ah, yes. Yes. There has to be a downside of any trade, right? Of course there is. So let's say you decided to take your $1,000 over in Japan. So you're gonna borrow $1,000 worth of Japanese yen, okay? So we take our $1,000 over here, $1,000 worth of Japanese yen. And now what we're gonna do is we're gonna invest that into the dip on Tesla, okay? And let's just say we bought Tesla just for giggles, because this could be anything, okay? You're like, man, Tesla's going to the moon, baby. I'm gonna buy it at 270. And then of course, you know, Elon rug pulls you and, you know, delays the robo-taxi event, whatever, okay? We don't, you put any placeholder there. This is not a Tesla video. This could be anything. It could be Nvidia. That darn thing's down like 25% from its peak, you know? It could be Tesla. Obviously, you're gonna be down about 30-ish%. It does not matter what it is. Or you have a leveraged position. Doesn't matter what it is. Let's go with you buy Tesla at 270, okay? You know what? Forget even what price it is. You just put $1,000 into Tesla stock right here because you borrowed $1,000 worth of yen. You put it all into Tesla stock. But wait a minute. If you put $1,000 into a broker in America, why are you just going to use $1,000? Come on, man. Reg T margin, 50% down. I get to buy $2,000 of Tesla with $1,000 of a deposit. Right? That is a typical margin loan in America. So now I borrowed the money cheap over here. the money that I borrowed very cheaply in Japan, I'm now going to leverage again in the US stock market. But why does this matter? I mean, the Japanese currency keeps devaluing. Everything should be fine. Oh, but wait. Then all of a sudden Japan says, hey, look, everyone, we finally got it up. Let's raise interest rates because inflation is finally moving up. What? Yes, this is exactly what Japan did last week. They raised interest rates 25 basis points, and they were already at positive. So they just went up another 25 BPs. And what happens when countries raise their interest rates? That's right, their bonds become more desirable, especially since Japan is now going up and everybody else is cutting. So you're getting more of a yield in Japan. So what all of a sudden happens to the value of the US dollar when yields go down? Oh, the dollar goes down. The Japanese yen goes up, which exacerbates the spread because you're going in both directions. And so, over the last month, so over the last 30 days, the Japanese yen has appreciated 10%. Oof. Oh, but wait a minute. I borrowed $1,000 worth of yen over here. How many dollars do I need now to repay that loan in Japan? Well, now, because it's 10% more expensive, I need $1,100 to repay my loan in Japan. No problem. What's my Tesla stock doing? Oh God, it's down 30%. And I'm on margin. Okay, so just to make math a little fun here, actually, the example I did is I went with 35%. So let's assume it's down 35%. That's down $700 on $2,000. So that means all of a sudden I have $1,300 left over here. But wait a minute. I'm such a degen, I also borrowed over here, so I actually only have $300 of equity. $300 of equity out of the $2,000 of stock I bought is 15%. Oh, who's that calling? Oh, it's Mr. Margin calling. Oh, now you get liquidated. Sure, you get your $300 back, but you got liquidated, which contributes to more selling pressure in the United States. Oh no, but wait a minute, bro. Now I only have $300 left, and I have to pay an $1,100 loan off in Japan. And now Japan is going, hey bro, margin's calling. And you're like, what? Why? Because, sir, you have $300 of collateral left on the $1,100 loan you just took out because we could see what you did with your money. We want our money back. You're at margin levels. And then you're like, okay, guess I'm filing BK and getting hosed. Boom. Now you have to either borrow more from somewhere else to pay off that $1,100 loan, or you're defaulting and you're destroying the banks, which now it totally makes sense why the banks are collapsing in Japan. Well, their stock valuations are collapsing because they are getting burned over here on their debt as well. So they burn us in our stock market and they burn the banks over there. Now, how big is this trade? Well, nobody really knows. Kathy Wood thinks it could be as much as 10% of the United States stock market. That's massive, like as much as $10 trillion of leverage in all risk assets. Crypto, stocks, doesn't matter. Okay, now, this is always funny because I talk about this in my course member live streams and people are like, oh, sometimes people are like, oh, but Kevin, crypto is not a risk asset. I'm like, it is the definition of risk asset. Why do you think gold is up and Bitcoin's down 11% right now? Your boy Kevin, by the way, let's just say this is not an advertisement or anything, but I've been talking about this for a couple weeks now, probably since about July 11th, like everything really hit the fan. But on the fund I manage, we're like 5% short Bitcoin. I wish I had more short Bitcoin right now because that's going to do really freaking well tomorrow. Remember, if you want any of my buy, sell alerts or anything, meetkevin.com. You can learn everything in the course I'm building your wealth. You should be part of the course member live streams because we talk about this kind of stuff on a daily basis, or even chat in our Discord server. But anyway, what is next? Well, maybe Japan can just print more money, right? And they could sort of solve this issue, right? Well, so far, the Japanese cabinet is saying they're watching market moves with a sense of urgency. And don't worry, share prices are determined by a variety of forces. And yeah, we're just going to keep watching. That doesn't really inspire a lot of confidence. So what about the money printing part, Kevin? Like when are they just going to turn the printer on again and make all this pain go away? Okay, well, in order to understand that, we have to consider what Japan's debt to GDP is and compare it to where everybody else is in the rest of the world. So we have a lot of debt in the United States. We're a little over 100% here. Japan's debt to GDP sits around 263%. That is higher than Venezuela, and it takes the #1 spot for being the most indebted country in the world as it compares to GDP. That's pretty pathetic. So I don't think they're turning on the money printer anytime soon because they freaking can't. Add to this the fact that an attack by Iran is likely imminent, and add to this that people are pricing in recession fears in America, and you've got a whole heck of a lot of uncertainty. Now, does that necessarily mean that the United States stock market is going to sell off on Monday? Well, the futures market says so, but that was during the Japanese stock market open. Maybe cooler heads will prevail and everything will be hunky-dory in the morning. Everything will start going up again. We'll have a nice little rebound, and maybe we'll open up to just a little buy the dip opportunity and nothing else to see here. Everything's fine. Or things will completely panic and everybody will take every opportunity at a bounce just to sell more stock because this is a sinking ship and everybody sees the exit over there. Well, according to a poll I ran on X, the latter doesn't seem to be the big priority. In fact, according to a poll I ran on X, which you should follow me there at RealMeetKevin with 6,761 results, 44.6% of you said, yes, Kevin, buy the dip. 34.3% of you said, I'm holding. And only 21.2% of you suggested that you were selling. Also, when I suggested that Bitcoin might be a risk asset, somebody replied to me and said, but Kevin, they're investing in Bitcoin for the tech. Right. That's going to help save you in these market moves. It won't. Anyway, so I'm curious. What do you all think? What are you all going to do? I will make the argument that probably the safest investment right now is cash, followed by treasury bonds, which might continue to collapse in yields. Now, you might be thinking, oh, but Kevin, the Federal Reserve is going to come bail us out, right? Well, this is where you have to ask yourself, what does the Fed care more about? Avoiding recession or avoiding inflation? See, I ran that poll as well, and the vast majority of people said, oh, the Fed wants to avoid a recession. And to that I say, I'm out of a drink. You're wrong. The Fed cares way more about destroying inflation because inflation ends countries. Recessions are healthy. So, buckle up. Buckle up. The Fed ain't coming to bail you out anytime soon. Now, if you want to know exactly what I'm trading, make sure you're part of those courses over at meetkevin.com. Always make sure to hit that subscribe button. We're about to cross 2 million subscribers, so if you haven't hit that button yet, and you're not part of the pre-2 million subscriber clan, I don't know what y'all waiting for. We got a great clan going on here, okay? The MKC. It's great. Come join. Thank you so much for watching, and we'll see y'all in the next one. Goodbye, and good luck. By the way, if any of this makes you nervous, you get life insurance in as little as 5 minutes by going to metkevin.com/life. You get Apple Pay or Android Pay for it. It's what Lauren and I use, and it takes as little as 5 minutes to sign up. That's metkevin.com/life. See y'all. Bye.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.